Hey traders, it's Wednesday, February 16th. I thought I'd just do a quick little chart analysis of actually some tables, something you guys I haven't really shared here yet. And I want to share my screen so you can see kind of what we're looking at from kind of the whole world at a glance of where the money's flowing, risk on versus risk off. And when the market's not favorable, the US markets, there's generally other areas that we can try and take advantage of it. And we want to start to become more active in this market because we are starting to get, I think, into the late stages of a bull market. I think we are going to eventually enter a bear market. The bond market is changing. It's not a safe place to be anymore. There will be its time to shine every now and then, but right now we need to find where the hot pockets are and we need to follow the money. And in some cases, you're going to see here, it might not be in US equities, US markets, maybe not even in bonds going forward. So let's jump into the charts and or the tables actually, and let's take a look here. So here you should be able to see all the different watch lists that we have sorted out through rankings, correlation, their strength over the short-term period, a whole bunch of different things, long-term trends, short-term trends. Is the particular symbol outperforming, becoming a risk on play? Money is flowing into it versus money flowing out compared to other sectors. So there's a lot of information on this chart, but a quick rundown will give you an idea. This is the major indexes. We got the Dow, the Russell, which is the small caps. We got the mid caps, the SP 500, NASDAQ. And then we've got different variations, more or less, of the stock market. We've got, this is actually sorted out in a pretty unique way. It's actually self-sorted through the analysis that we've created here. But really what we're seeing right now in this market is the money is flowing out of the large cap stocks. We've been seeing this a lot lately. If we look at the bottom, this is the SPY growth stocks. Growth stocks have been down the most. They're one of the weaker of this bunch. They're the worst performing. And we saw that in 2021. Growth stocks were definitely struggling to get a real bid in to push to new highs. In fact, they traded much lower, 30, 50, 70% lower throughout the year when you're looking at individual growth stocks. And as we work our way up to the list is the total market. Then we got the value ETF stock market. The value SP 500 has been holding up a little bit better. The top 50 large cap stocks where money tends to hold up. Last year, the stock indexes went higher because the large caps were moving up, dragging the indexes with them. But the majority of the growth, the little stocks, didn't move anywhere, or at least not to the upside. And then we got the equal weighted SP 500. And then we've got the dividend paying, the high yield dividend, which is performing the best. In fact, it's been positive for most of the session today, while the stock market is down, 3/4 to over 1%. So we've got this kind of list here that's telling us which pocket of stocks are doing really well. This is in terms of the large caps. This here is in terms of all the different size caps, small, mid, large, and the technology or the really strong growth stocks in the NASDAQ. And then we got the bond funds. We've got a whole bunch of different bond funds here, but more or less we're sorting it out. Now, as we know, bonds have been moving lower. If we actually take a look at TLT on this chart, top right-hand corner is the daily chart. TLT has sold off from the highs, once this loads here, from this high over here has sold off over 12%. That's not a very good safe haven play. People are nervous. They're trying to move out of stocks and they're moving into bonds and they're taking a beating. The SP 500 during this exact same time frame is only down about 5%. So there's some pretty interesting flow moving out of here. Rates are going up, bonds are going down. Maybe the 40-year bond market bubble is starting to burst here. But if we're going to take a look at what bonds were actually performing well, which opportunities when the stock market gave us a sell signal, which was this yellow bar down here on this chart, that's when the stock market says, hey, it's not favorable to be in stocks. You want to be in cash or something that has a low or negative correlation to the SP 500 or the indexes, so that when the stock market falls or trades sideways, another asset that's in an uptrend will most likely will move higher and become a defensive play. So if we were to take a look at the top ranked bond fund here, now this is the 20+ year, this is the inverse, the 1x inverse. And so because bonds have been selling off, they're actually in a very strong downtrend. And if you flip that chart, it is going to move in the opposite direction. And so we've got this opportunity here. You can see bonds have moved up 3.3%, very low volatility type of play. When stocks aren't favorable, you can find somewhere else to put your money. There's another one here. This is the 7 to 10 year inverse bond fund. A little slower moving percentage wise, instead of 3 1/3%. This one definitely moves a lot slower. It's about half that, less than that, down about 1.2%. But again, another very low volatility way to try to squeeze some money out of the market when stocks aren't favorable and when bonds aren't favorable as well. And then you could go the flip side. There's the corporate, high yield corporate bonds. Now there's an inverse ETF for this, and you can see it's rallied about 3%. Money continues to be very fearful. It's dumping out of the stock market, trying to get rid of risk. And we're seeing high yield bonds sell off, and this opportunity to the upside going forward. So as you can see, when the stock market gave a sell signal, there's opportunities for us to move in using inverse ETFs. Depending, sometimes this will be the TLT, the long bond fund, but right now bonds have been out of favor really since the COVID crash. They have been dramatically out of favor and not acting as a safe haven. And so we don't want to touch anything that's really falling, is the grand scheme of things. Now, if we were to look in this next basket going down, we've got all the different currency ETFs, and currencies can act as a very good defensive play as well. The top ranked ETF here is the emerging markets. It's like a basket of different currencies. And you can see here, since our sell signal on this chart, this yellow bar, we've seen this currency ETF, this basket of currencies, continue to move up. Now, these aren't huge moves, but when you're not in stocks and you want to be you're nervous, you want to be defensive, but you still want to try to generate revenue or income or growth, you can move into these very slow passive type of asset classes and ride these up while the stock market continues to crash and chop around in kind of a directionless manner. So that is an opportunity there as well. I really like the bonds, whether it's long or short. I like the currencies. They're very stable. And then, of course, you can go and look into international markets. A lot of times there's going to be some country that is in a bull market. And if we were to just sort by the strongest one, we've got the Brazilian ETF, Brazil ETF, and it's been in a pretty strong uptrend, rallying huge again today. It's up over 12% since the US stock market sold off. And there's obviously a whole bunch of different ones along here. You know, the Latin America ETF has done very well. Actually, all these have done fairly well here going forward. But you can see how some of these opportunities, once this chart loads here, you can see how there's quite a bit of upside potential where other currency ETFs can rally dramatically while the US stock market chops around, and they've got a nice strong uptrend. So that's another way to play these markets when they go unfavorable. And this is what we're working on bringing to life, so we can constantly be in positions, managing our portfolios, moving from asset class to asset class as it's needed, and navigating these markets, because we're not going to be probably in a rising market for a whole lot longer. I think the end is near of this bull market. Doesn't matter if it is or not. We want to be prepared. We want to make sure you start to get an idea of how we're going to be shuffling and playing, working our capital if the market starts to become very different than what you've been used to, since we've been in a 10, 12-year bull market. So you got to be ready for something, a change of gears if it happens, and don't want it to be a huge shock. Now we got inverse index ETFs. When those are really only active when we're in a bear market, because the market is in general falling. We've got VIX ETFs, potential plays there. We've got different sector, the main sector ETFs. We've got commodity ETFs, depending on which ones are performing best. And then we've got the wild, the more or less the really speculative wild plays here, all covering all kinds of different unique asset sectors, from aerospace to MJ to silver miners, gold miners, you name it. We got a whole bunch of different plays there. And of course, they get sorted and ranked by their strength. At any given time, we can figure out what is moving the most and what's holding up while the stock market is struggling. So hopefully that gives you a little bit of insight to where we're going. This is a lot different than how I normally show. Usually I'm very chart driven, but all of our chart analysis is actually condensed into these tables, showing us the relative strength to the SP 500, which is the yellow line. We've got our ranking system. It tells us long-term bear markets, short-term trends. Is the sector or the group or that particular ETF acting as a risk on? People are actually flocking to that at the moment. So they're all based on different time frames. So I can get a really good idea of what's going on. Looking at all these, it's like looking at 100 charts at a quick glance, and they're sorted from which ones I'm most excited about to, you can scroll to the bottom to which ones kind of the least exciting when you go and you look at Turkey, it's actually in a recovery stage, but it's obviously been in a little bit of a rough time here. If this chart will load, it's been trading sideways, not really moving anywhere during that time frame. And we don't want something trending sideways. We want something in a strong uptrend, pushing higher going forward. So hopefully that gives you a little bit of insight. I was hoping this be a little bit of an icebreaker into what we're going to start showing and potentially doing each week, so we can show you some of the hot sectors, hot pockets in the global economy of where to go when this market goes haywire, from commodities, currencies, indexes, individual stock groups, and all kinds of different bonds, corporate bonds, treasury bonds, all of those things. Anyways, that's it for now. Take care. Bye-bye.